Good morning, warriors of the truth, and welcome to the Barbershop, a place where we focus on cutting through the noise and identifying the truth in a world full of immense amount of propaganda. So today I'm going to focus on taxes. We're going to talk about really three things. We're going to talk about the Big Beautiful Bill, even the 2017 Tax Cuts and Jobs Act, and lastly, tariffs. How do they impact you? What do they mean to tax revenue? Now, I'm going to say this. I am not a tax professional. I'm not an accountant. That being said, I do have a degree in accounting, and I do specialize right now, and my job is helping businesses and wealthy individuals minimize tax exposure, specifically in retirement or on the day-to-day when it comes to a business thing. So, am I a tax professional? No. But do I know enough to be dangerous? Absolutely. I definitely am more informed than the average person commenting in a CNN thread on Facebook or Instagram. So with that, I think taxes and the Big Beautiful Bill, this has probably been the most politicized issue. I haven't seen anybody on the right or the left cover this in a way that allows you to understand what in the heck is actually going on. So we're going to talk about that today. Let's start with the Big Beautiful Bill. The Big Beautiful Bill was highly touted as massive tax cuts to the wealthiest individuals, the largest wealth transfer we've ever seen from the lower and middle class to the 1%. It didn't do any of that. There is not one tax cut or tax benefit to wealthy individuals in the Big Beautiful Bill. Not one. So let's talk about what it did. There are only a number of deductions. There's not a lot of changes from a tax perspective inside of the Big Beautiful Bill. All it did is roll out several deductions. There's a SALT deduction, which is a deduction you get on your federal income taxes for anything that you spend on state and local taxes. They increase that amount. Now, people that spend more money are going to have a bigger benefit to this, but it's only going up to about $40,000. So this is really not going to move the needle for wealthy people. This is going to move the needle and is very meaningful to middle-class individuals. There's also an overtime deduction. That is not going to benefit the wealthy in any way, actually. That is very much targeted solely for labor workers, right? So that is, in my opinion, a huge benefit to lower and middle class individuals, the overtime deduction. There's a tip income deduction. This is huge for bartenders, servers, somebody that I was in the past, right? Once again, nothing that benefits the wealthy. I would say that's more lower to lower middle class. There's an auto loan deduction for American-owned auto loans. If you own a Chevy or a Ford or even a Tesla, you can deduct the interest on your loan up to $10,000 per year. It's going to be hard to get that $10,000 number if you're just deducting the interest, I think, unless you have a super expensive car, something I don't because I'm cheap, but I do own American cars, all three of them. No, two of them. I have two American cars and one foreign car, but so I won't see much of a benefit, but I will see a little bit. Coffee time. There's a senior bonus deduction. This is a huge win for senior citizens. So they're expanding the deduction for seniors. Not an impact to wealthy folks. That's awesome for retirees. There's an Alaska whaling captains. I don't know what the heck that is. It looks like a deduction for whalers in Alaska. No idea why that's on there. No idea who paid the administration to make sure they're putting in something for Alaskan residents. There is a number of other deductions, but none of them are really, like I said, nothing here focuses on the wealthy. They're expanding the standard deduction. That's something that's going to impact every individual. Largely middle-class individuals will see the biggest benefit. They're also expanding the child tax credit. So once again, these are all things that are going to benefit the middle class primarily, and the working class is nothing from that regard that is new in the Big Beautiful Bill will benefit the wealthy. So this was a massive propaganda push by the left, massive, as how they phrased it from both the media and from a politician perspective. Now, what they were referring to when it comes to this is a massive tax cut for the wealthiest individuals. But let's say that one more time. There is not one new change to our tax law that's going to benefit wealthy individuals in the Big Beautiful Bill. Now, what was supposed to happen? The current tax code, the current tax plan is called the Tax Cuts and Jobs Act from 2017. That was Trump's tax bill. It's been the tax law that we've had since 2017 all the way up until today. That tax bill was scheduled to sunset at the end of 2025. So at the end of this year, we were reverting back, for the most part, to 2016 tax law that we had prior to Trump's Tax Cut and Jobs Act. They extended that to last forever. So that's what they're phrasing as massive tax cuts for the wealthy, is the extension of our current tax law. So any headline that said the Big Beautiful Bill provide massive tax cuts for the wealthiest individuals is just a flat out lie as we go through the facts. And I encourage you, put this into ChatGPT and see for yourself. See what is in the Big Beautiful Bill. Now, what are they talking about when it comes to extending the Tax Cuts and Jobs Act? So once again, just extending our current tax law. What does that mean? What was in that original Tax Cuts and Jobs Act? Well, it provided a tax reduction of our tax brackets for every individual, for the high income earners, middle class, lower class, everybody got a tax deduction. They also expanded the standard deduction, meaning the standard deduction is far bigger than it was before. It just means far less people itemize their receipts and itemize deductions anymore. That's actually a big win, because that was where most fraud happens, is itemized deductions. I'd probably done it in the past myself and said I had receipts for things that I really didn't. But now that there's a bigger standard deduction, it's not important to itemize, because very few people, I think like less than 5% of individuals, are even going to need to itemize anymore. That's how it's been since 2017. Nothing's changing in regards to that. So very small difference when it comes to the reductions in tax brackets. Once again, this was from 2017, not in the Big Beautiful Bill. This is all what we've been living under for the last 8 years, right? Now, what the left meant, right? When this 2017, you probably remember when they rolled out the Tax Cuts and Jobs Act, it was largely promoted as the biggest tax break for the wealthiest individuals. Just a slight drop of the tax brackets is not what they're referring to. What they're referring to was a reduction of the corporate tax rate. The corporate tax rate for C Corps was at 39%, I believe. 38 or 39. 38 or 39. I don't know exactly which one it is. We're going to go with 39. 1% doesn't make a big difference. High level, you know what I'm talking about here. They dropped it down to 21%. There's good and bad with that, right? Obviously, we're losing tax revenue. That's bad. The good is it allows businesses to make more money. When businesses make more money, the stock market returns higher. Typically, wages will go up. The left is going to tell you there is no trickle down of that savings. It's only going to go to the wealthy people. Now, we've seen the stock market go on a tear since then. It's survived a global pandemic. It's survived a record inflation, and the stock market still has done pretty well, largely because corporate tax rates have remained at a lower level. Now, at the end of 2025, corporate tax rates were scheduled to go up to 39%, go back to where they were prior to 2016. This would have had a massive impact. With last time corporate tax rates were at 39%, the cost of living was probably half, right? Everything doubled in price, from housing to everything that you buy at the grocery store since 2016, right? After the pandemic, everything is way more expensive. That's just a fact. We all know this. So there likely would have been massive ripples if we essentially doubled the corporate tax rate at the end of the year. that very likely would have been passed down in the form of goods being priced at a higher rate. So I find it very, very funny that a flat corporate tax rate, right, of going from 21 to 39%. So what the left wanted is not to have the big, beautiful bill and corporate tax rates to increase by 19%. They claimed that that would be just a higher tax for wealthy individuals. Yes, that's probably true. But if corporate taxes go up, returnings to shareholders and return on equity is going to be less. So that's going to mean they have to offset that because businesses need to maintain a certain number or level of return on equity, return on investment, or return to shareholders. So they largely would have likely cut expenses, which can be in the form of layoffs or reducing salary, reducing pay of employees, or it would have been a number of things. It was very likely also going to increase price of goods, right? As when returns are smaller for a business, they're not going to absorb all of that. They're either going to reduce costs, they're going to raise prices, or do a blend of the two. Which gets me to tariffs, because tariffs are another form of corporate taxation. A flat corporate tax rate is a below-the-line taxation, where tariffs are somewhat of a above-the-line taxation, and they're rolled into cost of goods. Largely, both of these are corporate taxes. So I find it hilarious that this has been branded as a flat... If we're looking at the corporate tax rate, that's a tax break for the wealthy. But if we look at tariffs, even though that is a tax that is solely paid by corporations for some reason, those will pass down and be absorbed by us. What is the difference between a corporate tax, which is what the left wanted, is an increased corporate tax by 19%, and tariffs on goods that are imported into the U.S.? For the business, they have the same exact impact. How they're treated by the business is essentially the same. Now, could we argue that there's a higher likelihood that tariffs will be passed down to individuals or consumers more so than a flat corporate tax? Sure, because it's above the line versus below the line. But tariffs also will influence and shift corporate and consumer behavior. Let me give you an example. If there's a good being shipped in from China and it's going to get whacked with, let's just say, a 50% tariff. I don't know where they're going to end on tariffs in China. They can't just flat raise prices by 50% because we're in a free market. Those Chinese goods have to compete with American-made goods and goods that we get from other countries that have a lower tariff rate. So if they increase prices directly by 50% and they're now an outlier and more expensive than any other good in that segment, they're not going to sell as much. So they have to absorb a portion of this in order to maintain a competitive position in a free market. The other side, like I said, is it's going to shift consumer behavior. People are going to start gravitating because of that free market towards cheaper goods, and those cheaper goods are now going to be manufactured in potentially the US or other countries that don't have a higher tariff, which is going to have a positive impact on our economy. It's also going to shift production and different areas of the business from overseas to domestically here in the US, which causes economic expansion. The reason I'm saying all this is there's multiple ways to skin a cat. Increasing corporate taxes by a flat 19%, which is what was supposed to happen if we didn't have the big, beautiful bill, would have increased prices, would have potentially led to salaries being reduced. On the other side of it, tariffs likely will increase prices, likely will lead to businesses cutting costs because they are both a corporate tax. Only one of those, in my opinion, I'm unbiased. I guess I am a little bit biased. I do think the tariffs, keeping a lower corporate tax rate and offsetting our tax revenue loss with tariff revenue, is a better idea than just a flat corporate tax because it shifts consumer and corporate behavior in a direction that's favorable for our economy. right? It leads to economic expansion and also leads to folks promoting U.S. and domestic made goods, which once again is a positive thing for our economy. Whereas just having a flat increased corporate tax does nothing outside of increase tax revenue. So when we look at how they've politicized this big, beautiful bill, how they've politicized tariffs, you can't look at it in a vacuum. Yes, the big, beautiful bill is going to lead to growth of our deficit. That's a bad thing. But we have to take into consideration that lost revenue being made up with tariff revenue. And then lastly, the economic expansion that comes along with changes of both corporate and consumer behavior should lead to an expansion in GDP. And when that happens, that's more tax revenue. So I don't know what the answer is here, folks. But what I do know is that this has been not covered accurately by anybody. And what I want to do is focus on cutting through the noise, cutting through the propaganda, so you guys understand what is actually going on. Big picture, the big, beautiful bill with tariffs, we're long-term reducing the flat corporate tax, and we're offsetting that by a different type of corporate tax, which is a tariff. Both have the same impact on the business. For some reason, the left just wanted to label a flat corporate tax rate as increasing taxes on the wealthiest. We're just making them pay their fair share. Even though a tariff is a corporate tax, that's not the same message they're giving you around that. They're saying, oh, they're just trying to raise prices on all of us innocent people. No, both of those taxes are going to do exactly the same thing. They're both corporate taxes. Yeah, they're going to maybe be treated a little bit differently because one's above the line and one's below the line. But at the end of the day, I think it's a good benefit because the tariffs should shift consumer and corporate behavior in a direction that's going to lead to economic expansion. That's a lot for a morning where we haven't showered and we haven't even gotten through our first cup of coffee. But I appreciate everybody stopping by to the barbershop where we focus solely on cutting through the noise, the BS, the propaganda, and bringing everybody the truth in a world full of propaganda. With that, stay frosty, stay classy, and quite frankly, make somebody smile today. Bye-bye.